Welcome back to the channel and welcome back to another weekly price action review. So just to set the stage, I create these weekly reviews primarily for my own personal revision, if you will, or homework, in order for me to identify improvement, hold myself accountable and that sort of stuff. And I post them onto the channel because if it in any way can help somebody with their understanding of the markets and so on, then so be it. But I have goals and aspirations that I want to achieve within trading, and I believe that this is one of the mechanisms that's going to help me get there. I'm not going to be perfect. I'm not going to always hit the heights that I set before myself, but we're going to keep trying and we will get there. That's the mindset that I have. I'm locked in on that and I'm focused on that. Is I will get there. I will achieve everything that I want to achieve and more, as long as I stay disciplined to the process and submit myself to the process, and that's what I'm doing. The start of the year hasn't been brilliant in terms of, not because I've taken losses or anything of that nature. It's just the market cycles have been incredibly, I wouldn't say challenging, but just not hitting my models as I would have liked. There have been some missteps by me where I haven't capitalized on something as well as I should have done. But again, I'm sticking to my models, I'm sticking to my edge, and I know that in the long run, it's going to yield the results that I want. I've just got to make sure that week by week, I am making these incremental improvements, and they will all add up when it's all said and done. So that's my message to everybody: is just stay with it. I'm in that same position as well, but I can see and I believe I'm improving on a week-on-week basis, and things will consistently and continuously move in the right direction. Bit of coffee. Let's begin. So I'm not going to take too long on this. We're going to sort of get through weekly, daily, and the H4, as I think they're the sort of key takeaways. And we may delve into the hourly, but I'll see when we get there. Although I don't necessarily think that is massively important. I think down to the H4 is where it's really key. So, looking at this weekly time frame. So, following this high time frame crack and correlation at the highs, which set the stage for lower prices, and ultimately we had an old low weekly here, and then we've got the old low monthly. So it set the stage for lower prices, and then for the market to ultimately go and purge this old low monthly. So I was ultimately into this week. Once we sort of had this week close, I was looking for a continuation of lower prices. Now, that being said, let's just, for the sake of argument here, let's get NQ. So we're going to have a look at this in sort of relative real time. And the reality is, I don't necessarily know the answer to this, and maybe this is not really the time frame to look at this on. Maybe the daily would be beneficial, but we'll sort of have a look. Let's have a quick look. I think so we're looking at this. Yeah, I'm kind of. Yeah, so potential SMT at the lows heading into the week, but I would want to see confirmation of that SMT on a lower time frame. But anyway, let's just stay on track here. So ultimately, I was looking for a continuation of lower prices. One of the reasons for that, and I do mention, sorry, just rewinding slightly, was the fact that it was possible to see a potential resumption of higher prices. Again, if there was a high time frame crack and correlation at the lows, confirmed by a lower time frame crack and correlation here at the close of this week, anywhere potentially here or so on, that would support the idea of higher prices. But ultimately, the market, if we look at this week here, the market closing where it did confirmed the weekly bearish order block. Okay, and naturally, naturally, with this rejection here, that's supporting the idea of a continuation of lower prices, whereby if we were to see a lower time frame cracking correlation at the highs, that could support that move down, and ultimately that's what we saw with the market trading down into the old low monthly. Okay, so let's delve down into the daily. Okay, so again, following on, I'm just going to grab some coffee, but following on from that weekly commentary, where I noted that my anticipation was a continuation of lower prices. So if we look here, this is where Monday is. Okay, ultimately the market opened on Monday and traded higher to form this SMT at the highs, before rejecting and repricing lower. And as you can see how the market sort of failed to trade down into that old low monthly. Once we saw this reprice lower in the close, we've confirmed this bearish order block. Now, I don't particularly use order blocks in my analysis and so on. But one of the things that I wanted to see is, once we've confirmed that, is there a H4 imbalance in here that the market may want to look to trade up to in alignment with that bearish order block to support the idea of lower prices. That's how I'm ultimately framing that. Okay, so ultimately the market, obviously, when we got into this day, trades up into the order block and then rejects lower down to the high time frame drawn liquidity. Okay, so the key thing to note here, or to see, and we can just do this for the purpose of this, would be, let's just put a, look at this line which we were referencing, that order block, the start of the body. Okay, so again, I'd be looking at this key price level or anywhere potentially inside of this order block to see, does a H4 imbalance exist, and then ultimately I want to see H4 order flow kick in to continue with lower prices. So with the daily order flow being bearish, as we can see from the high here, and that's been supported by the unfilled breakaway gap up here. We've also got the bearish BPR up here as well, and yes, there is a small imbalance here where we saw a reaccumulation of further shorts, which then ultimately saw price trade down below this old low. Daily order flow is bearish. So we then note how the market then consolidates where we noted a high time frame cracking correlation in this area here, which we'll see on the H4 time frame, setting the stage for further lower prices targeting this old low daily. Once we've seen the cracking correlation here, we're targeting this low there. The market then continued to reprice lower, which it did, purge the old low before repricing back into this daily range to close the week. Okay, so some key takeaways there. Obviously, high time frame cracking correlation on Monday, supporting the idea of lower prices. That cracking correlation as well occurred above the weekly open. So again, if we're looking at Monday's price action, I typically tend to use the weekly opening price. Now, I don't trade Mondays, but if I was looking to frame something on that day based on this framework, this high time frame framework, well, then I'd be looking for price to trade above the weekly open price. Okay, so now if we just drop down to the 4 hour, where we've got a bit more to digest. Okay, so again, as detailed on the weekly and the daily time frame commentaries, I was anticipating lower prices, targeting the old low monthly. I believe it's this level here. Yeah, as the high time frame drawn liquidity. Okay, and then as noted on the daily commentary, the market opened as we saw here. So we look at the beginning of the week, the market opened, repricing higher above the weekly open, which is here, to purge this old high H4, which is likely the Asia range high, but significant now because it's been upgraded to a H4 time frame liquidity pool. So again, as part of the way I look at the markets around, identifying the hierarchy, if you will, of liquidity pools. Okay. So reprice higher above here, and then we note this high time frame cracking correlation at the highs with YM before the market displaces lower. Okay. And so the market displaces lower, purges the previous day's low at that point in time, setting this low of the day before repricing back up into this daily range here, closing back inside. Okay, but it failed, as we've noted, to purge the high time frame drawn liquidity, or certainly trade into it. So we note then the market trades up into the SIBI H4, where we actually do note a low time frame cracking correlation here above the true week open, following a high time frame cracking correlation. That's a model. Now, this, I believe, probably occurred during the Asia or London session. Okay. So that would have confirmed a model in initiating this run lower. And ultimately that run lower purged the previous daily low and then trades down into the high time frame drawn liquidity. Okay, and ultimately trades lower to set the low of the day for Tuesday before the market reprices back up into the daily range. Okay, and then we see this continuation of higher prices following that low, essentially back above the true week open, but almost just falling short of purging that previous daily high. Okay, so following the market forming this old low daily down here, we note this consolidation, and then ultimately, so following this low, and then obviously the market trading higher. Okay, we note this consolidation here before the market then reprices lower, but fails to purge the old low daily. Excuse me. Okay. Now at this point, the old low daily wouldn't have been formed. I'm just referencing it as the old low daily, but it wouldn't have been formed. It would have been a previous daily low. But now, just for the reference of this, it does get upgraded after Wednesday's price action. It gets upgraded to an old low daily. So we then see the market reprice higher, purges this old high H4 upgraded liquidity pool, but falls short of purging this old high here, H4, and also the previous daily high. Okay, so this is the previous daily high of Tuesday, not here. Okay, so once that trades higher, we have this high time frame cracking correlation here. Okay, which sets the stage for lower prices. So the market failed to reprice higher and purge this previous daily high. Now, I would have loved it to have done that and traded back up into this SIBI. That would have been ideal. But unfortunately, That wasn't the case. So it forms this with YM, setting the stage for lower prices. Okay. We then see this short consolidation heading into Thursday, before the market then aggressively displaces lower, targeting previous day low, Wednesday. Okay, as the high time frame target. So it trades lower, but it fails. It fails to purge the previous daily low. Okay, and it failed to purge that previous day low, but it formed a high time frame cracking correlation at the lows, below the true week open. So ultimately, this could promote short-term or near-term higher prices, right? Now, in terms of my protocols, this would constitute a counter trend trade. Therefore, only one model can exist in this area, and two, I am looking at the first H4 inflection point as a area in which the market could reverse from, which was this CBH4. Okay. Because despite this cracking correlation at the lows, the H4 order flow was still bearish in alignment with the daily. Now, overall, from a macro perspective, the weekly was bullish, but near term, the weekly was bearish as well. So we had an alignment between the three high time frames, if you will, supporting lower prices. Okay. So the market trades up into this SIBI, where we see a low time frame cracking correlation within here, supporting the idea of lower prices, and then we see this rejection, and the market ultimately trade lower to purge both the previous daily low and also the old low daily liquidity pool. And then we also note how the market sets the low of the day. Okay. So we then get this consolidation here. So we note this consolidation prior to NFP, maintaining a tight range, which is typical. Before the market ultimately double purges the high or the low and then the high. And then ultimately we see the market rejects and reprices lower to form the low of the week, which is here, before trading back into the daily range to close the week. Okay, so a really interesting weekly price action, and more so a consolidation with a downward trend. I'm just going to drop down into the hourly just to show certain pieces, but I'm not going to delve into this too much, but I just want some of the key takeaways from the weekly. So obviously we saw the Monday price action above the weekly open price, above the 2-day open, purges the H4 liquidity pool, and then we see this massive sell-off. Okay, and then we ultimately see Tuesday here Monday into Tuesday, this cracking correlation inside of the CBH1 overlapping with the CBH4. See a cracking correlation at the highs after running the Asian range high, and then ultimately we see the market come and retest this H1 order block before repricing lower. But again, this happened all sort of pre-market before London. But again, something could have been framed in there down to the previous day's low. Would have been a very viable target there. Okay, and then ultimately here we see this high time frame cracking correlation form here. And again, this ultimately formed during or confirmed during the PM session, whereby eventually we get a confirmation of this move, and the market trades lower. And then we see, as I mentioned, this high time frame cracking correlation supporting the idea of higher prices into the H4 inflection point, where we trade up into the overlapping CBH1, where we see this the PDA SMT at the highs to set the stage for lower prices to ultimately purge the previous daily low and the old low daily. So that is ultimately my overview of the week. Hopefully you've taken something from that. It's, as I always mention, it's very key to then document your key takeaways. Document your key takeaways, and just to sort of give you guys an example of one. So for me this week, I noted, if a game plan is still valid and plausible, I must remain locked into the charts until all models are no longer valid for that day. Because I had a tendency where I've earmarked, maybe 2-3 models, typically 2 at least, and one of them could have formed. So for instance, give an example of, say, this one forming down here, and maybe I wasn't able to get involved for whatever reason, and it's traded into the H4 inflection point, and I may have outlined another game plan, which would have been, if the market trades up into this H4 inflection point and forms some form of cracking correlation, support the idea lower, but I would have stayed around for this model here, seeing that it didn't offer an entry, and then I would have gone, knowing that this model is still very much valid and could still form. So that's the key takeaway there, is to stay locked into the charts and not go anywhere until all models have been are no longer valid. So hopefully you found this one insightful. If you've got any questions, do feel free to put them in the comment section, and I happily get back in contact with you. But yes, stay consistent with this. This is what's going to drive success. It's going to drive improvement and discipline. It's a key weekly process that must not be skipped. So ensure it gets done, and putting in maximum effort and really, really focusing on ensuring you are doing this with intentionality and really getting what you need out of this practice. So with that being said, I'm going to leave this one here. Hopefully you've enjoyed it. Hopefully you've taken something away, and I will catch you guys next week with the next one.